It's been a super quarter for M&M. All three product categories, tractors, SUVs, trucks, have done well. And despite a spike in commodity prices, the margins are fairly strong. So does it mean Achhe Din for the auto sector as a whole? I'm joined by Dr. Pawan Goenka, the Managing Director of Mahindra & Mahindra. Dr. Goenka, sum up the quarter for us. I mean, it's been a very, very strong quarter, way ahead of expectations. What were the key drivers?
Well, as you said, that this has been a very good, in fact, I would say perhaps the best quarter for us in our memory, with 20% growth in auto, 40% growth in tractor, highest ever profit, highest ever revenue, almost highest ever profitability. So we couldn't have asked for more. The question is, what is driving it? It is not something that happened overnight. It's a accumulation of a lot of things that we have been doing over the years, and also helped by external environment. So it's not just because of what we did, also because of the environment. So let's just talk about environment first. The tractor industry had unbelievable quarter with a growth that has not been seen before, which is aided by the fact that the crops have been good, pricing has been good.
Rural income is good.
The rural infrastructure development, the whole focus, agriculture, the government's focus on farmers' income, and the various initiatives that we have, which has driven the growth in the industry. And we, with all the products that we have launched in the last 3 years, the new platforms that we have, we're very well poised to take advantage of the opportunity that was there in the marketplace, and that has played out very well for us with the product, with the pricing, with the kind of brand that we have built over the years, and has given us a very good market share. To have almost 43% market share in a market as competitive as India is, and that too for such a long period, does require to have everything right. It cannot be just one thing, has to require to have everything. So that's what has worked very well for us. What has also worked well for us in the tractor business is that we are looking beyond tractor, beyond India. And we have a lot of efforts that we have put in the last 2 years in acquiring certain overseas companies, and some organic growth in terms of what we're doing in Brazil, in Mexico, in US, of course, we've always been there. And so even though these were not very big numbers in this quarter, but did add to the overall performance and do prepare ourselves for future. And the third thing is looking at the mechanization beyond tractor, the farm equipment. Again, very small right now, but something that has been growing very rapidly for us and could become very big business.
Dr. Goenka, we'll come to SUVs and commercial vehicles, but let me touch upon the margins. I mean, margins have been very, very strong. I mean, we have seen it shooting up to 25%.
If you look at our historical performance on margin for the last 5, 6, 7 years, we are in a band of plus minus 1%.
Yeah.
We do manage it very well. It's not always one thing. It's not always passing on commodity prices. Sometimes an increasing volume helps us. Sometimes we take sales price increase, but we overall try and balance the various inputs that come into defining the margin. So obviously our endeavor will be to maintain the margin. Yes, it's a good margin to have. Our endeavor will be to maintain it. We have done that in the past. I would expect to do it again, but time will tell.
If I turn to your commercial vehicle business, you projected a growth of around 10 to 12% for CVs. If I look at the Tata Motors volumes, they've also given out very strong indications for the coming fiscal. Do you mean to say that finally the spends on infrastructure will start to happen?
I think so. I mean, clearly that is driving the commercial vehicle growth, and we have seen good growth for some time now. It's not just coming in this year. The HCV especially will grow because of impending BS6 from 2020, which will have a huge impact on pricing, maybe 1 lakh, 1.5 lakh, 2 lakh, depending on who you believe. And therefore, I would expect that FY19 and FY20 will be very strong year for HCV. On a small commercial vehicle, there is a natural, or LCV, there's a natural demand pull that's happening because of the various initiatives that's happening in our industry, the hub and spoke model, the deliveries, the e-commerce, all of that is driving the LCV growth, and LCVs have been growing for quite some time now. So I think again we are in for 1 or 2 very good years in the commercial vehicle segment also.
And what about SUVs? I mean, there you are projecting something like around 15%.
15% is
the
what,
upper.
yeah, 15% is what we are saying. SCVs again, I mean, SUVs have performed really well in the last 3 years now, and India now has almost 28-29% of passenger vehicles coming from SUVs.
But competition is also very intense in that segment.
Very intense, undoubtedly, and also one starts wondering, what do you call a SUV anymore? And every product that is being launched wants to be called a SUV, and therefore the boundary of what's an SUV and what's a hatchback is almost becoming a blurred boundary, and therefore whether market share in SUV becomes such a major thing, one has to rethink, and one has to look at passenger vehicle overall to see how you're performing in the passenger vehicle industry.
But if I look at the backdrop of the broader economy, I mean, in this context, private investments are still not happening. If I look at private investments in greenfield projects, there is no big projects being announced. I mean, how long do you think this lull phase will continue?
See, I think if you look at investment in general, India had overcapacity till recently, and normally one starts seeing fresh investments coming in when the capacity reaches about 80%. I believe that this is the year when most of the industry, many of the companies, will cross that 80% threshold.
Okay.
And therefore, I would expect new investments to be announced now. So the kind of growth that we have seen in various segments, the slowdown that happened, say, 2 years before, had taken away the capacity, sort of given a capacity gap in terms of excess capacity, and that's what now is filled with good growth in FY18 for many industries, and FY19 many industries projecting very good growth. I think we will be in good shape now.
So you expect investments to kick in by FY20?
I would expect announcements to start happening now, and investments to happen in FY20 and 21.
But do you expect the crude oil prices to be the party pooper? And especially, I mean, if I look at the automobile industry per se.
It can be. I don't think that we've reached a level of crisis in oil prices. Earlier, my threshold was $70. $70 has been breached now.
Yeah,
and there's nothing magical about 70, actually. But somewhere around there. I mean, if it reaches 100, let's say, then yes, definitely is going to be a concern. And the concern is that with deregulated prices that we have now, petrol and diesel, our pump prices are going up very rapidly and are the highest ever that we have seen. Even when the crude was 130, we didn't have the 85 rupees, 86 rupees kind of petrol prices. So that is going to start having an impact. But there are many other factors, positive factors, that will offset this negative, because demand is not driven by a single factor.
Absolutely.
And there are many positive factors.
So which are the key factors you think?
First of all, overall economy, number one. Number two, affordability. The affordability in India for automotive products is very high. If you look at our income levels and cost of owning a decent vehicle, I consider, compared to say 5 or 10 years ago, the affordability is very high. So that's a very big positive. The rural infrastructure investment that is happening, which will drive commercial vehicle growth. The aspiration in the rural segment for owning a vehicle, and therefore growth in the rural segment also is very high. All the macroeconomic factors, such as which affect demand, are all on the positive side, right? So unless the oil price, inflation, commodity price, interest rate, all of these go in the wrong direction together, then obviously it will pull down the demand. But if one or two of these factors go wrong, I think we have enough other positives happening that will offset the one or two negatives.
But oil prices pose a big risk to the macros. I mean, whether it's the fiscal deficit, whether it's the CAD, I mean, what sort of a rub-off effect you think it will have on inflation? Because inflation has been within that comfort zone. Suddenly there's a risk that we may breach that.
Yeah, so see, I would not want to second guess what actions the government will take on this. When oil prices were going down, there was a headroom for the government to increase the duty or taxes on the oil and manage the overall revenue for the government. Now that when the crude price is going up, a reversal of that probably will have to be done. If the oil price increase leads to pump price increases for diesel and petrol and is passed on completely, and then I do think it's going to have a impact on inflation and therefore overall economy and consumer confidence. And I think government will have to do something about it.
You expect the government to cut excise duties, because that's something that's being debated for a long time.
Yeah, so that's what I'm saying. I don't want to second guess the final decision, but as a layman, I would think that the extra excise duty that was sort of put on when the prices were coming down will probably have to be reversed to some extent at least.
Actually, theoretically speaking, we've embraced price mechanism for petrol and diesel. But with the government owning most of the petrol companies, do you think there is any argument there? Because at the end of the day, these are decisions that are taken more by the government, less by the OMCs.
Well, see, as far as the OMC concerned, now they are working on a pricing formula. Right?
Yeah, that is there.
So therefore, pricing formula is something that is given, and I don't think they have a leeway to decide what the pricing should be. Where the leeway is in whether the excise duty that is imposed on petrol and diesel should be cut. That's where the leeway is, and that's more to do with not OMCs but other arms of the government.
Do you think electric vehicles is the right answer for high diesel and petrol prices? And what are the challenges before we make that grand switch?
Well, you know me very well how much I believe in electric vehicles. Absolutely. And therefore for me, in some sense, the oil prices going up also is positive, because that makes electric vehicles more justifiable. But I think we shouldn't count on oil prices to make EVs more viable, because that's always a transitionary thing going up and down. We need to make electric vehicles viable independent of what happens to oil prices, right? And I don't think we are very far. We are almost there in terms of making the prices viable, as long as 2-3 things happen. Number one, the current level of incentives that the government has should continue for 3 to 4 years more. I'm not asking for more incentive. What we have right now is fine, but that need to continue for 3-4 years more, so that the volumes go up to a level where it becomes self-justified. Second thing is we need to work on the infrastructure for charging, which is happening, and needs to perhaps happen a little bit more rapidly. And the third one is more localization, and therefore incentivizing the localization of all the components that go into electric vehicle. If these 3 things happen, then the prices will also come down, affordability will become much better, and I think 3 to 5 years from now, we will not need any government incentives to be able to justify electric vehicles.
Would you say that the roadmap of 100% EV in public transport and 40% in personal mobility, do you think it's a realistic target?
See, I think it's too early to define a target like that. The reason I'm saying it's too early is that we are just starting and we are almost at zero. Right? And from there to talk about when we become 100% is too early. We need to start implementing. We need to wait for a year, 2 years to see how the whole EV cycle works, and the affordability justification, the product performance, the customer acceptability, all of these things, and then we can talk about when 100% should happen. Whether it happens in 10 years, 15 years, 20 years, I think right now it's just a date, and I would want to see a little bit more sort of volume, a little bit more of portfolio on the road before we can talk about a roadmap.
One thing is for sure that EV will be a big disruptor. I mean, what are the big challenges that you see in this transformational journey over the next 3-4 years? I mean, job losses is definitely, there's a fear that there could be job losses when we switch to a completely new mode of transport.
Well, anytime we have a change in technology, there is a fear like what we have right now, because things are getting disrupted. It doesn't mean that we are going to have job losses, but certainly means that we will have different kind of jobs. Right? Yeah. So electric vehicles, for example, perhaps will have more IT job, more electronics job.
Many employees will get redundant in the process.
That is correct. Now, when you talk about servicing, for example, the kind of servicing infrastructure that we need for IC engine we will not need for electric vehicles.
Absolutely.
Because the reliability of electric components perhaps is very high and less need for servicing. So there will be a disruption. I think what we need to be careful about, and this is what I keep saying in different fora, is we should not end up exporting jobs.
That is true.
Which is very important.
It is very important.
Very important. And auto industry today has become almost 100% local. Still some high-end vehicles, components are getting imported, some CBUs are coming in, but if you look at the mass market, it's 100% local. And that has happened over a period of 20, 25, 30 years. If I go back to 1980s, 1990s, there's a lot of import, which has now been taken care of. If you're not careful, we can go back to that level where everything is getting imported and we are doing assembly. And we need to be very careful in not letting that happen. If that doesn't happen, then I think overall we'll be all right in terms of total jobs being created by the auto industry, because we will lose jobs in engine components, engine machining, but then we will create jobs in terms of making motors, in terms of assembling batteries, and more or less it will probably balance out.
But is there a fear of losing jobs via, I mean, it's getting exported? I mean, is that a real fear?
That is a real fear if we try to move at a pace which is faster than localization that we can do. So therefore, while on one hand it is good to move up very rapidly in electric vehicles, on the other hand we don't have the ecosystem for doing everything locally, and if we try and move very rapidly, we'll end up importing.
But when you talk about a 2030 goal, I mean, is it too early or is it in line with what you are expecting?
I don't think anybody is talking 2030 anymore. I don't think so. I think we are backing off to saying let's sort of get started, move, and then we will see where we are. I think 2030 is very rapid. If we try and do 2030, we will end up importing a lot and probably exporting jobs in the process.
Turning to SUVs, I mean, you are looking to launch 3 new models in this financial year. You've laid out almost what, around 15,000 crore for a 3-year period in terms of capex. I mean, what's the kind of bump up that you see in SUVs over the next 2 to 3 years?
Well, I will not want to give a specific number, but let me put it this way, that the 3 products that we are talking about, the U321, the S201 and the G4 Exton, for us, for Mahindra, these are sort of what I would call white spaces, in the sense that they are not replacing something that we have today. Yeah. And therefore, whatever volume that we get from these 3 products will be additional volume for us and not a replacement volume for us. Whether it is 2,000, 5,000, 8,000, 10,000, whatever number it is, that's a growth over our current volume. Right now, we are selling 22, 23, 24,000 SUVs in a month. And the volume that we get from these products, let's just for the purpose of talking, say it's 5,000. If it's 5,000, then that's 20% growth. If it is 10,000, it's 40% growth. So it's a pretty good potential for us with what might happen with these products. And 2 of these 3 products are in volume segment. One product is in premium segment, and therefore obviously premium segment means smaller volume. But there is a good volume potential from this. It will all depend on how will we position the product, how we price it, how the product performs, and therefore I will not want to put a specific number that this is what our number will be, but we are quite hopeful that these products will be liked in terms of what we are offering in design, what we are offering in technology, and how we price it. All of these appear to be very positive to me right now, and we are quite hopeful that the products will be
in fact,
successful,
you just
but we always
rolled
have
out,
to keep our fingers crossed.
You just rolled out the TUV 300, I mean 30, and you also rolled out the KUV late last year. I mean, what have been the learnings from the launches when it happened? Because I'm sure it didn't quite meet your expectations. So going ahead, how do you play the game?
Well, clearly with every launch, even with successful launch, there is a learning. There is a
absolutely.
learning. It's very difficult for me to describe on camera what those learnings are. and some of it is perhaps confidential information that I wouldn't want to share with everyone else. But let me say that with every launch we become wiser.
I'm sure.
And we try and take that learning into the next launch. Some of it is in product. Of course, that learning is already built in because we are just now completing the final, giving the final touches. But equally important is the learning in how we position the product. Okay, and good positioning and bad positioning, or right positioning and wrong positioning, can kill a very good product if we position it wrong. And therefore, to me, the marketing of the product and the product itself go hand in hand in making the product successful. It's also very important for us to get the pricing right. And pricing right doesn't mean pricing low. Pricing right means pricing right. Because if you price it too low, you are actually creating a negative image of the product.
Absolutely.
And if you price it too high, then of course you don't sell it. So we need to get the right balance of pricing also. And there is no, unfortunately, there is no formula that can tell us what is the right pricing, which it's a view that we take. And every time for every product that we have launched since the days of Boleros and Scorpio, the night before the launch, we are always sweating to kind of figure out what the right price would be. And sometimes we get it right, sometimes we get it wrong.
I mean, if I look at your alliance with Ford, how does that play out in the overall scheme of things?
Yeah. So I think the Ford alliance, as we have announced, is an alliance where we are looking at 8 or 9 different things where Ford and Mahindra can work together and benefit each other. Something that are happening, for example, looking at our purchase prices for various things and see whether there is some learning that Mahindra can have from Ford and vice versa, and that's working quite well. But specific thing that we have talked about is a platform, common platform for SUV that we will launch towards end of 2020, early 2021. I think that's a very big deal both for Mahindra and Ford, because we will have significant saving that will come in product development and significant reduction that will happen in material cost because of larger volume. Then we are looking at Ford sourcing Mahindra engine for some of their platforms both within India and even markets outside India.